Let's talk about buying a smaller ticket item then. Production troubles hitting the auto industry from several directions, all while automakers keep a watchful eye on costs. This as the U.S. continues its push for companies to build EV components of its products domestically. So where does all this shake out for the road ahead in the auto industry? Here to discuss is Michelle Krebs, Cox Automotive Executive Analyst. Michelle, thank you so much for being here. In the meantime, when we're talking about electric vehicles, it looks like we now have a price war going on that side of the market. Tesla sort of leading the way there, but a lot of other EV makers are cutting prices. How far do you think that price war goes, and what is it going to mean for market share?
Well, one of the reasons we are seeing this price war is that, Tesla dominates the market, at least here in the U.S., not so much in China. It has its competitors there. But they are losing market share, even though they still dominate a huge amount of the market. So they have cut prices, and we are seeing other automakers introduce EVs that are cost less. And so I don't know if I'd call it a full-blown price war just yet, but certainly some skirmishes here and there.
But what will we learn about the consumer within that skirmish on price, especially considering the number of different packages that are key to margins for many of the companies that are now putting some type of electric vehicle out on the market, whether that electric vehicle has historical brand equity in the name or whether it's a brand new offering?
Well, we are just seeing a lot more variety of what automakers are offering. We've got everything from smaller, from sport utility vehicles, which are the most popular segment, up to pickup trucks. So there's a much wider range of choice for the consumer. And I think that will lead to some price reductions. And we also know they need to proliferate EVs further. They have to be more affordable. The average EV price in the U.S. last year was well over $60,000, and that's just out of reach for ordinary Americans. And that's where some of the tax credits will kick in as well.
And speaking of the tax credits, a lot of them have different measures attached to them. In other words, a lot of the components have to be made in the U.S., for example. And we are getting more and more news from the automakers about plants that they are planning or supply chain changes that they are planning in the U.S. What is that going to do to the economics, and how long is that going to take?
Well, the tax credits are pretty complicated because it depends on the vehicle, the price of the vehicle, where the vehicle is made, where the battery's made, and eventually where the components for the battery are made. So it's not easy to figure that all out. But we certainly know from different surveys that people will be moved a little bit by those tax credits, by the potential of that.
Though not having the highest market share in China, can Tesla, in the reopening and perhaps the wave of purchases that might be made in electric vehicles, can they be the best market share gainer over the course of this reopening process?
I'm not an expert on China. I don't think that they'll gain share here in the U.S. They'll certainly still be the dominant player. I mean, even their sales will increase. They will still dominate. It's just that, once they had 100% of the market, that's not sustainable. So that market share will come down, but they'll still be the dominant player for sure, with higher sales and a very high market share.
Let's zero in a little bit more on Tesla here in the U.S. because there has been some negative press around them recently, a recall, whatever the company itself wants to call it, right? It has to issue that over-the-air update for its quote-unquote full self-driving. California has also seen some more negative Tesla numbers. Do you think that is going to affect demand overall for Tesla?
Any kind of negative press certainly hasn't hurt sales before. Last summer, when Elon Musk bought Twitter, we saw the perception and consideration for Tesla drop through a variety of surveys, but they still posted very strong sales. So I don't think it will necessarily affect their sales. I think, more it'll be about the competition in the marketplace.
And Michelle, as we talk about electric vehicles, and we talk about them almost daily at this point, we still should note, despite all the grand plans, right, they still account for less than 10% of U.S. sales. What's going to be the tipping
About 6%,
point?
6%, yes.
6%, right. So they're small. What's going to be the tipping point here? Is it going to be cost, or is there something else that is going to switch what consumers are willing to buy?
A couple things. The EV charging infrastructure is critical to proliferating EVs, and it's starting to improve, but we're hearing lots of complaints about chargers that don't work. There are not enough of them. So that is absolutely key, because that still is a concern. And then affordability. Affordability is also key to proliferating. We've got to see more affordable to mainstream Americans, see that accessibility before we'll see a proliferation of EVs. When that tipping point will be, that's a little hard to say right now.
Yeah, makes sense, though. Those are the two keys. Thank you so much, Michelle. Appreciate it. Michelle Krebs, Cox Automotive Executive Analyst. Appreciate it.
Thank you.